All right, let's get started. Today is Wednesday, September 10th, 2025. Let's take a look at the market and see what's happening today. The E-mini S&Ps are up by 0.1%, with the VIX futures up by 0.27%. If we take a look at the net change here, we have Amazon down almost 3.5%, Apple's down 3.3%, we have Nvidia up by 3.3%, and Tesla up just ever so slightly at 0.3%. Let's take a look at our activity tab to see if we have any trades that were made since our last episode together. So we can see here that we filled CNC together yesterday on yesterday's episode, but today we have fill here in HUT. So I can explain to you what happened. We had some microphone issues in our recording earlier, and so the recording of this fill wasn't even worth posting. So I'm doing a redo here. So what we did here was, let's go take a look at our positions tab, and this will make a little bit more sense. If we take a look at HUT here, we have a leg in the money, and it's our call side. So if we go to the analysis tab, we can see, or the chart rather, we can see that we had another rally in HUT today. If we go back to our positions tab, we can look at the analysis on it and see what happened here. So we have our short strangle here. Now, our original position, if we go back to the options chain here, our original position started on August 11th with the 17 put and the 28 strike for the call. Later in August, we rolled out from the September cycle to the October cycle, and we were at the 20, what was it? 20, yeah, we had the 20 put and the 30 call. So we were right here with the 20 put and the 30 call right here. As you can see with this rally in HUT, it blew past our 30 call. So what we had to do was roll our puts up, which is what we do. We roll up the untested side. And I wish I could show that to you, but I'll just step back through the steps here and demonstrate what happened. So with that 20 put, I forget the delta on it. I want to say it was like a 4 or 5 delta on that 20 put. And so we rolled it up to the 25 put to balance out our deltas a little bit more. Our position had about 55 short deltas, and we neutralized that a bit, and now we're sitting at about 39 to 40 short deltas by rolling that up. So we collected an additional 85 cents in credit, and then we put our good till cancel order back on so that we can close it out automatically. I just want to step through the math here real quick, because I think it's really important to step through this and not just breeze through it. So I'm going to open up 3 different calculators here. And so we'll start out with the initial credit. If you look down on the right in the options chain, the initial credit was $1.10. So we have $1.10 here. And so our max profit on a strangle is always 50% of the max profit. Well, our target, rather, is 50% of our max profit. So at $1.10, we multiply that by 0.5 to get the 50% of the max profit, which is 55 cents. So we're going to leave that there in that calculator window. Now, let's go over and do the math. You can already see the average trade price is 302, but I like to run through the math myself just to double check it. So we have $1.10 that we collected on August 11th, plus $1.07 that we collected on August 29th when we rolled from the September cycle to the October cycle. And so that brings us up to a running total of $2.17. And then earlier today, when I rolled the puts up in HUT, I collected an additional 85 cents. So let's add that here, 85 cents. So you can see we're at 302, which is our average trade price that's referenced here, 302. And again, our profit target was 55 cents, which was half or 50% of the credit received initially on the trade, which was $1.10. So now to set our closing order, our good till cancel order, I'm going to take this 302 and subtract 55 cents from it. So that tells us that our closing order should be in at $2.47. So if we go back over here to our positions tab, you can see we have a limit order here. It's GTC, which stands for good till cancel. It means this order, if we were to put in just like a day order, when the market closes, then that day order would get canceled. But good till cancel means it will span across days. It'll sit there until the order is canceled or filled. So it's GTC, good till cancel. At $2.47, we're currently on this position trading at $5.28, which means that this position is going to have to come in a few dollars for us to hit our profit target. So what scenarios would cause us to hit our profit target? Well, a couple of different things. If this underlying comes back into these between these strikes, we could potentially hit our profit target if some more time passes. Likely what will happen here is we'll have to wait for some more time to pass. Possibly we might have to even roll it out again for duration. Now, let's say that this underlying rallies some more and moves up to 32, 33, 34, 35. What we're going to do is we're going to incrementally roll our puts up. So we'll react to that. If it continues to rally, we'll roll our puts up all the way to the point where they meet this 30 strike here, which is where the call is. And at that point, this position will become a straddle. It really doesn't change anything. We just call it a straddle because we share the strikes on those short legs. But it's really pretty much the same thing. But you'll see that risk graph start to narrow, and it'll come to the point where there's a peak. And so for us to hit our max profit in there, we would actually have to pin it on that peak versus having this flat range up here. So we could just leave it there, and HUT could continue to rally. It might come back through. It might come back through and blow past our straddle and catch us on the put side. So what I'm going to probably do is, depending on what this does, we'll adjust accordingly. But I may end up rolling up to the 30, creating the straddle, and then at 21 DTE, depending on where the underlying is, we'll do what's called buying the guts and selling the wings. We'll buy that junk that we have. It's a position that's not working out for us. And then we'll resell it at the proper deltas as if we were putting the position back on. This all assumes that IV rank remains high in HUT. Right now it's at 42.9. If IV rank gets low, that might be our trigger to close because we have more risk of IV rank expanding or IV expanding and going against us even further. So we, have to balance risk mitigation with defending this position. But I think we can turn this one into a profit. It's just probably going to take a little bit longer than it normally would with a position that just does exactly what we want it to do. So enough on that. Let's go back to the positions tab. Let's take a look. We have Chipotle Mexican Grill here with a vertical short put spread. And we can see that Chipotle has gone against us a little bit further. We'll take a look at the chart here. It's further down beyond this lower 3 ATR bound. And so if we go back up here, we can see that we have that short put that's down a little bit on P&L at 37.5. If we go over here and take a look at the analysis on it, we're still trading north of the short put, so we're still in the good zone. And we can come down here all the way to 37.5, or we can go a little bit further to our break-even point, which is the amount of credit that we received minus 37.5 rather, minus the amount of credit that we received. I'm not too worried about this one. If Chipotle continues to tank, we can just roll out for duration and adjust those strikes if we need to on the short put. Really easy thing to do here. So I feel good about Chipotle. Famous last words about the time that I say I feel good about a position is really the time that it tests me. But we've learned a lot of lessons in the past. And so we're trading way smaller than we've ever traded before. And with volatility being at, lows right now on the year, not completely lows on the year, but near lows on the year, we're just staying very, very conservative here with our positions. So we're going to have a lot of stuff go against us before we're in trouble or we start to worry. So no worry here at all whatsoever. All right, so nothing else to look at there. Let's take a look at the watch list to see if there are any opportunities for any additional trades. We're taking a look here at 4 and 5-star liquidity, and we're sorted by the IV 5-day change. SOC, the markets are kind of tight in there. or they're not tight. They're the bid-ask spreads rather are wide. Let's go back here to the trade tab and go to short strangle. We'll clear this one out. Let's set up another short strangle. We'll push it up to the 30. What am I looking at here? 37 day. We'll go to the table tab and we can see, 470, 550, 380, 470. Those are way too wide. We don't want to mess with that. CNC, we already have a position in. UNH, we can take a look at here with earnings coming up in October. Let's push it out to the 37. We can go to the 18 delta, the 16 delta, 827. This one's really big. If we buy the wings, those are $10 wings. Yep, $10 wings here. We can bring the buying power effect down to 764, collecting 236 with a pop of 67, P50 of 77. We could try to bring this down a little bit more by, let's go down to the 10 delta and let's see what happens there. We're going to 9 delta on the put side, collecting $1.11. Buying power effect of 889. Our pop, our probability of profit is 83 with P50 at 89. We might want to consider this. Let's look at the chart for context. So our shorts are at 290 and 420. So if we go take a look at the charts, 290 puts us right about here, which I don't really like. I don't like that at all. And 420, even though it's a 9 delta and a 10 delta, 290 and 420. 290 is, right about there, and 420 is up in this ballpark up here. I don't like that. It just seems like we're too close on the put side, and I don't trust it, and especially with defined risk because we don't have the ability to adjust those the way we would like to. So let's leave that alone. HUT, we have a position. IREN is one that we've never traded before. We can take a look. Let's see what it sets up as. We'll go to the 37 days, a 15 delta, and we can't even get down to below 21 delta here. So let's go inside the one standard deviation, $1.98, 986, 77. Let's look at the bid ask, 55, 67, $1.13, $14, $1.62. A little wider than I want. I think I'll pass on this one. Barrick Mining never works out for us. mRNA, we already have a position. MP, we could look at, but I think I'm going to pass on that. NDX is a big product, and GDX, we already have a position. Everything else is red. So really nothing else to do here. I'm okay with, I'm not just trying to get a lot of positions on right now anyway with, the VIX over here at, at the levels. The VIX is up slightly, but let's hold off. All right. Well, thank you for watching, and join us again tomorrow for another episode of Decay Factor.